Good morning, Jags. This is Fahad. Today is Thursday, January 7th. Let's get started. Two things on my watch list this morning I want to quickly discuss. First, let's take a look at this earnings report from Walgreens that just came out. The chart that's in front of you is a long-term weekly chart. I'll cover this in a moment. But the most important thing is that this was a pretty disciplined quarter. And what I mean by that is that when you look into the commentary, it's pretty clear that this company managed its costs very well. Margins improved in almost all categories, despite COVID-led disruptions led to the prescription same-store sales to actually miss expectations slightly, while the rest of the store from the company actually posted a better growth. This should naturally improve going forward from here because as the vaccine continues to get distributed around the country, the total foot traffic in Walgreens stores throughout in the first half of 2021 should gradually improve. And on top of it, this management has cut the cost dramatically in many different spots, running a very lean operation at this point. So that should be sufficient to keep the free cash flow growing with a stronger growth than what we saw last year. Now, what does this mean? This means that technically this chart on a long-term weekly scale. This is a 3-year chart that's in front of you. This is going to start to potentially at some point start breaking out through this major resistance. Important thing is that this $45 level right here, if you look at pre-market, this stock is gapping higher and trading after closing at $43 yesterday. It's trading at $44.40, $44.30 in pre-market. The question is going to attack this $45. Actually, it'll go to the long-term weekly scale right here. It's going to attack this $45 resistance. And if it does so, with the MACD and the RSI both rising on the weekly scale, it potentially opens the air pocket all the way to $52 per share. Okay, so I don't know if this will do this today, but I think the path of least resistance is higher gradually from here, as the total is the narrative and the commentary around this stock on the street should gradually continue to improve. Along with this, there's another important element that I would like to bring up, which is this press release that actually came out last year, and it seems to be now catching more attention with the earnings report this morning. Last year in July, the company announced, Walgreens, that it will be making a strategic investment in VillageMD. And VillageMD is going to open between 500 to 700 full service doctor offices, basically pharmacy clinics, with doctors and everything within the next 5 years. And it's a major industry push into this one. This is one of a kind of an investment that Walgreens is making. It's essentially diversifying its operations away from just being known as a pharmacy, but also getting into the actual physician's business. And so this morning in the press release, they're announcing that they're going to accelerate this investment by making, they're moving the timeline faster. They're going to make $1 billion investment into this much faster than what they announced about 6 months ago. Here is the actual website of this company, VillageMD. And so the plan here is to open up to 700 of these units. Each of them is going to be in the total space is going to be between 3,000 square foot to about 9,000 for bigger places and more higher traffic areas. They're going to do all the hiring and everything in collaboration with VillageMD, and there's going to be as many as 700 units open over the course of next 2 years instead of next 5 years, with a much faster investment horizon taking place. I wonder how significant this is from the earnings perspective for this company going forward from here, because this should naturally move the expectations for this company going forward, and we should see those 2022 earnings estimates, particularly for Walgreens, should start to actually respond positively with a much dramatic improvement. Market is always forward looking, so in about 6 months to 9 months from now, I think the analysts are going to start basing the earnings estimates based on fiscal year 2022, which are going to look far more attractive compared to what they are going to look this year especially versus 2020, when the retail operation was significantly affected by the COVID-led disruption. With all this said, this stock is still down by 50% essentially after reaching its peak in 2018. So I think that steady recovery in this stock will gradually continue from here. But let's see today if it is going to push through $45 resistance. That's my immediate short-term resistance level that's on my chart. Let's see if it will push through today. And if not, then maybe in a little bit time. And then eventually, I think it goes to at least $52 to $53 resistance. So that's the first stock I want to cover real quick. The second one, and here's an interesting one. So there's an interesting story coming out. So I'm going to give you something that I discussed in the Jaguar first quarter outlook that many Jag clients already have. I'm going to refresh your memory from that. So in the first quarter macro outlook, I presented 5 key themes, and I said that these are the 5 themes to watch and then we provided our specific best ideas, best picks in each of those 5 themes. This was all in the macro section. This is one of those themes, building modernization super cycle to begin sometime this year. Building modernization super cycle, very specific niche category, and some companies will benefit from it. So this is an actual snapshot from the Jaguar first quarter 2021 outlook from the macro section. And we mentioned over here that there's a lot of debate going on the street currently about ESG beneficiaries. While it is certainly powerful, driven by both private and public supports, there's a lot of froth created by many different stocks. However, the building modernization boom is going to happen, in my view, and is going to discreetly benefit certain companies versus over others. There's a line over here: the building stock put in place from 1980 to 2000 accounts for 1/3 of the total square footage, with many of those buildings not having significant retrofits for HVAC and others. And we estimate this shift increases the addressable market size by 3 times, from 15% to over 45%. That's the first snapshot. Continuing on this discussion is the second snapshot from the Jaguar first quarter outlook. We said right over here that our favorite way to play this multi-year mega trend is train technologies, symbol TT, which is a $34 billion well-diversified industrial that provides climate control solutions for the building modernization theme. Now, close all of this out. This morning, Bank of America is recognizing this very opportunity that we discussed in the Jag first quarter outlook. They are upgrading train technology, symbol TT, from a sell rating to a neutral rating, is specifically on we thought was going to happen, which is the Democratic control of the Senate. We see greater likelihood of a Green Deal under Biden and a Democratic-led Congress. This should boost investor sentiment around HVAC as it relates to clean building retrofits and ESG. This is exactly what we discussed. And they go on to say Biden's proposed Green New Deal includes targeting zero net energy buildings and refrigerant upgrade. These would be retrofit tailwinds for HVAC manufacturers. Train appears to be at the forefront of energy efficient solutions. At the December 14 Investor Day, management focused on innovation and product pipeline. Several energy products were highlighted, including near zero global warming potential refrigerant systems and artificial intelligence solutions to monitor building energy use. You know, the question right now for all of us that we should be asking is, what is the first thing that, or the most important thing that Biden will do during the first 100 days in the office? I think the answers can go into many different directions, but generally we can all agree what are exactly the Democratic policies that are going to come forward, whether it's going to be during his first 100 days in the office or gradually throughout in 2021. This is one of those proposals that I believe will come forward sometime in 2021. And the pure play on this is train technologies. Now, with that said, if you look at TT chart, This thing has started to break out yesterday after about month and a half long consolidation on very, very heavy volume. And with the today's upgrade coming from Bank of America, I expect this thing to push higher and take out all of this resistance around $152 per share. Let's see if the upgrade can push it above into the breakout territory. The volume was very, very high. MACD is rising. The RSI is rising. Should easily run up to 160 or even higher. Probably not today, but over the course of next couple of weeks and such, as the investors' appetite start to improve towards this stock. That's it from me, Jay.
Morning, everyone. So my discussion today is going to be on Callaway Golf, ticker ELY. Last time we talked about the stock was on December 22nd in Jaguar Live, where we provided recent industry channel checks. More specifically, Golf Data Tech, that data for November showed that retail dollar sales of golf equipment jumped 60%. Looking more closely at the hard good category, sales grew 63% in November, driven by double-digit gains across all product categories, including woods up 72%, irons up 68%, putters up 64%, wedges up 52%, and balls up 52%. Truist was out with a note after that, highlighting that November marks the 6th consecutive month of 10% plus retail gains, as well as the highest rate of year-over-year growth that we can remember in their 12 years of covering the space. This is also on pace to be the strongest year for golf retail in well over a decade. Truist is also pleased to see the more consumable elements of the industry, so gloves and golf balls posting 30% plus gains, which speaks to the broad upswing in participation that has continued into Q4 and sets the stage for a strong start to the 2021 season. Then KeyBank had their own note out this past Sunday where they cover a lot of different things, a lot of proprietary channel checks from them. And there were three that stood out. Number one, analysis of Topgolf credit and debit card transactions via their key first look data shows an accelerated reopening recovery in Q4. While the data reveals shifting trends in visitation and spend and demographics, the consolidated spend per customer is running at a strong 110% of full year 2019 levels since reopening. The spending increase has driven a strong recovery in venue level revenue, offsetting recent traffic declines, with Q4 total spending right now at 111%. They then took a look at sort of to validate those claims. They then analyzed the Texas mixed beverage tax receipts for Topgolf's 11 Texas venues. And so Texas beverage receipts essentially capture, the volume of monthly alcohol sales within a particular venue in that state. And Topgolf, like I said, they have 11 venues, and it's the largest state for Topgolf. So KeyBank says we come away encouraged by similar broad-based strength. For example, trends recovered steadily into October, with receipts in October at greater than 100%. In November, it did see a slight decline due to the case count, hospitalizations going up, but that was still up 83%. And then the final point that I would make, and I think this point has gone under the radar. Topgolf offers what's called Top Tracer. Basically, using state-of-the-art technology, Top Tracer tracks the flight path of every golf shot at these bays in the Topgolf area, and then it displays it right on your HD screen when you're practicing. And I know you can do a lot of simulated games, like you can, potentially kind of, simulate a golf outing at, Pebble Beach, for example. But anyway, going back to November 12th, the company held a conference call to discuss the entire Topgolf business. And management said that today we have over 300 licensees operating over 7,500 Top Tracer range bays in over 30 countries, with an additional 2,000 plus bays under contract for future installations. And the final point that I would make is KeyBank talked to a number of individuals who utilize this technology. And some of that feedback was, we were one of the beta facilities for ProTracer 4 years ago before it became TopTracer. Even with limited awareness, it completely changed our business model, increased our revenues probably in the 15 to 20% range just in the first year. After we implemented around 18 bays in that beta, we liked the tech so much that we added another 18 about 2 years ago, and it's only improved our range revenue. With how hot the industry has been this year and having the technology, our capacity is pretty much maxed out each day, and our wait list is lengthy.
Very good. Excellent updates on all of those. Question is this going to $35, $40 per share gradually throughout in 2021 as the recovery begins? You know, one thing is, I will point out, this goes back to the point I've now made multiple times, that you look at these percentages here for the month of November, 64%, 64% for irons, 36% for wedges, 57% for putters, and 47% for balls. I mean, all of these are very, very strong, right? Even simple things as bags up 61%.
Sure.
But if you look at the actual dollar amount of the sales for November 2020, right? And then you compare it to, let's say, 2 years ago. So you're comparing it to the period well before pandemic. I think you're going to notice that, you know, these percentages may actually not be as strong as big, but what's really happening here is the comps. Year-over-year comps are very, very easy for a lot of companies. And I understand that November may be a little bit outside of that particular box because the pandemic shutdown maybe actually began in February of last year, but maybe these people are placing the orders early before it happens, right? So the point here is that this is exactly what I would expect from the consumer discretionary segment during the entire first half of 2021. These percentages are going to look huge for so many different stocks throughout this year, at least all the way up until August or September of this year, and then we'll see if it's going to come down. And as for the IPO is concerned, TopGold and all this, I'm looking forward to that one still. I think that any update on that is going to remain very, very bullish. In fact, I'm planning on doing a big party over there in the one that's established in Troy, Michigan over here sometime this year for some friends and family. But yes, that's a very big kicker for the company. Should be very positive going forward. Excellent stuff, Jay. Thanks.
Yep.
Chronicle. Morning. Today I have a preview for the next JaguarMedia video, and this is going to be part of the online education theme, but it's also going to be filed under Chinese Tech Demystified. Company is China Online Education, COE. This is the one that I've chosen to go with because I think within the US, that increased student application theme, it's probably going to be more of a Q2 and Q3 story, whereas in China, the increased demand for proficiency testing and application processes, that starts now, and that's on top of the secular tailwinds that the Chinese remote education industry is currently enjoying. So I think this will be a decent play on both. Basically, this company runs 51 Talk. You may have heard of it before. It's one of the biggest platforms for online tutoring and live streaming classrooms globally. And what they specialize in is the English language. For a long time, they were focusing solely on K-12, but recently they've been making moves into helping university and college applicants prepare for proficiency tests like the IELTS and SATs. They also recently created a program called American Academy and the 51 Talk New Concept English, both of which are premium services. And then when we look at the domestic K-12 picture, 51 Talk is growing pretty rapidly in terms of active students and gross billings. Part of this is because this company is able to recruit teachers remotely from other countries. Right now, a lot of their English teachers are from the Philippines, where they are logging into the platform from the Philippines, and they're teaching online classes to kids in China. And they're getting between 17 to 22 US dollars per hour, which isn't too bad for a side job. Now, what I'm noticing lately is they're starting to branch out to other countries by aggressively recruiting teachers internationally, not just from the Philippines now. So just imagine like you're living in America and you're one of the teachers for 51 Talk. you don't have to move to China to teach these kids. You can literally sit in your own bedroom and teach a class from there and earn some side income. And then all that aside, the technology this company uses is kind of interesting. For example, they have this mobile app that students can use to book and manage their lessons, access pre-lesson prep materials, and also communicate with the teachers. And then within the class itself, they have this proprietary technology called Air Class, which is an interactive whiteboard that uses a bit of machine learning to help facilitate the online class. And there's also this very impressive student-teacher review system that this 51 Talk employs. So we're going to cover all of this in the upcoming full video. Now, if we look at my annotated chart of the stock, we can see that it made a 500% rally at the start of last year. Since then, it's been in a 10-month consolidation where it's building a base. This is currently a $600 million market cap company on $275 million annualized revenue, and I think it can easily get between 1 to 2 billion, being a $1 to $2 billion company over time as 51 Talk continues to grow.
Excellent stuff. I just shared a URL for a news that just broke out actually as you were talking, and it happens to be related to the Chinese education tech stocks. Just a high-level view on the industry. I'm not sure if there's something there that that applies to COE, this discussion that we're having, but here is the news that just came out. The demand for long-term planning for K-12 education track is increasing. How does, I don't know how you say this name, Zursi International adjust in light of the situation? Maybe take a look at that, see if it's applicable at all, but I just saw that news come through my screen. This is a very interesting one. We are very, very bullish on this entire space, as you know, on the education tech, and we have done quite a few trade ideas around this one. So I'm looking forward to this presentation. Should be a fun one. Yesterday, we gave you all a bullish view on similar company called Zovio, symbol ZVO, which was the second time that we have discussed this name in this space, and now COE will be the sixth episode of the Chinese Tech Demystified series that hopefully we will produce in the JaguarMedia in the next couple of weeks, and we will let you know when that's ready. But this is the preview for that. Great stuff, Chronicle. Looking forward to doing this. Folks, I just want to point out something real quick before I close this out. Virgin Galactic is in play again after this stock has been corrected. This thing is actually ripping higher in pre-market. It's going to open up by about 5 to 6%. And remember, this thing was trading well above $30 per share, as high as $34, $35 per share before that news came out that they had to postpone the test flight, or they could not complete the test flight because the ignition did not last long enough to send the aircraft, to burn it, for at least a minute long, to send the aircraft into the orbit so it could free float at that particular point. And that resulted in abort of the website, which resulted in stock coming down sharply. Well, it has now corrected. It's sitting here, and just moments ago, this company just tweeted out that they are actually on track to do this again. This is a thread. Following a test flight on December 12th, we have completed the post-flight inspections and root cause analysis of what caused the onboard computer to halt ignition of the rocket motor. Corrective actions have been defined and work is already underway. And they go on to say that once this corrective work has been implemented and verified, we will confirm a pre-flight timeline for the next test flight and share expected dates for when the flight window will open. I'm assuming that they are near the tail end of completing all of these inspections based on these tweets. So this stock is probably now bottom and will probably start to gradually climb back higher, all the way back to $30 per share. So one to watch from here. All right, folks, we're going to stop over here. Thank you very much. See you in the chat room shortly.